Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Monday, November the 29th, 2010. Well, a change of trend today, and we have a candle that's made a lower high and a lower low. Previous day we had an inside day in bar chart terms, and the day before that was a candle that made a higher high and a higher low and tested resistance up around 1200. Today we've had a candle making a lower high and a lower low and testing support at 1183, 1179 and down to 1173. Those three areas of support that we highlighted previously that the market was trading around and finding support around and resistance around as well previously a few weeks ago. Now we also have a very long shadow on the bottom of this candle, and that highlights how strong the support is down to this 1173 region. It shows very strong upside price rejection, and it shows that the sellers have lost commitment throughout the trading day. The market opened up at the highs, traded down fairly substantially in a nice decent range for this candle, certainly compared to the previous day's trading. But the sellers lost commitment when they were trading down there, and the buyers came back in and bought the market back up for them to close and control on the trading day. But the most significant thing is that the sellers have lost commitment. The buyers weren't strong enough to actually take out the previous candle's high. Now, the market is trading up above the cloud or the Kumo, so we have an overall positive bias to this market. And the market is also trading down below the Kijun-sen, which means that we have a slightly negative bias in the medium-term time frame. In the longer-term time frame, trading above the cloud, so a positive bias. Trading pretty much at the Tenkan-sen in the for the fast-term time frame, so we're pretty much neutral in the fast-term time frame. Now, just looking a little bit bigger picture, we highlighted previously the potential head and shoulders pattern. And this is now turning into a more complex type of potential head and shoulders pattern. And here we have the previous uptrend, which is very important. For the head and shoulders patterns, we can't have this pattern unless we have a decent uptrend. Then we have formation of the left shoulder, formation of the head here, and formation of the right shoulder. And we can see here previously that we had the shoulder form. We tested support down around the neckline, and the market tried to bounce off there, and now we formed another slightly lower peak here, and we've got two types of shoulders here. But head and shoulders patterns are like a lot of patterns, aren't always the perfect patterns that we see in the textbooks, and they can be a little bit complex, and this is certainly one here that is looking a little bit more complex, but the market is interacting with the area around the neckline, which coincides with support around 1173. Now, the thing is that the market has failed to close down below that neckline. Completion of that pattern would be a close down below the neckline, and what you'd like to see is a bearish close down below there for a good probability of the market to trade down and meet targets. Now, because this is occurring up above the cloud and the breakout is or if it does occur, would be close to the cloud, then there is a very strong chance that the market won't meet the potential target from this head and shoulders pattern. The market will be interacting with the cloud if it does break out to the downside, and we have a very thick cloud in this area, so very strong support all the way down through from 1167 down through to around 1117 or so. So a long area of support, and certainly some previous areas where there's been some swing highs or swing lows, and some very well-defined support as well down around 1133, 1150 and 1163. So I think that if we do have that breakout from the head and shoulders pattern neckline down to the downside, then we really do need to be careful about taking that type of trade. With there being very strong support here, obviously that area is an area we need to watch for the next day's trading, but certainly around the high and this 1191 area is a place that we should be watching. If the market does change trend and start trending to the upside with a higher high and a higher low. We have very strong resistance offered at 1200, a round number. So we need to watch how the market reacts to that level. If we have a bullish close up above there, then a very strong likelihood that the market will test the area around 1219 and just above there now, roughly about 1227. So a bullish breakout up above there would see the market potentially appreciate to a large degree and test these areas. But as we've said, to the downside, very, very strong support. So we do need to watch these areas for any potential breakout over the next day or so.